We have higher mortgage rates keep the market subdued even as more sellers list their homes. Now, this is interesting to me because we've seen it's like one day they say, new listings are down. And then literally the next week, new listings are up. And new listings are down again. Yeah. New listings are up. And they're up year over year, but they're down month over month. And they're down year over year. They're up year over year. It is constantly changing.
Yeah, it's constantly changing.
Here's here's my takeaway of laying that foundation is this means to me exactly what we've been saying all year long is we are going to be in conditional circumstances the whole year. Yeah. People are going to have to get creative with their financing. They're going to do cash outs, even though people would go out at large like that doesn't make any sense. It does for them. They're going to have to rely on their house to help them out of a pinch, and people who have to move are going to move.
Yeah.
So I think it's always going to be circumstantial until the rest of this year, and then we'll see in 2025 whether it becomes more situational versus, not situational. It's circumstantial and situational now. In 2025, we'll see if it thaws out to become more I want that, and that's
based on the need.
Yeah, or just the desire. Like, I want a new car. Correct. I want a bigger house. I want a pool. You don't need a pool. Yeah. You want a pool.
Yeah. I think more people right now are going more basing their new, purchase and everything like that. Their big purchase is going to be based on needs.
Yeah. So go ahead.
No. So last year we were talking about, I don't know if you remember, but all three of us were on there. We're talking about what do you think the home supply is going to be at the end of the year?
Oh, we were way off.
Exactly.
Okay, I was way off. You were the closest.
Yeah. But so yes, I agree. Right now we've had from last year 34% more homes available than we did last year. Last year we were running like 450-ish, 500 almost. And now we're at currently I revisit that, we're like at 762,000.
Yeah.
And what's normal, so you guys understand, what was normal prior to pre-pandemic levels was like 1,100,000 homes available at any given time, monthly basis in the nation, nationwide. Yeah. So seeing that at 700 and some thousand is not too bad.
It's better, but we're coming out of the ditch.
Exactly.
It's like we're crawling out of the ditch. It's like we have one arm out the ditch, but the second arm and the rest of the body is kind of still in it.
The other difference too is when we had those 1,100,000, affordability was there.
Yeah.
We weren't in this affordability
you have more price
crisis.
competition, right?
Exactly.
It's like, if I got to sell my house, I got to price it lower than the next guy or two houses over, whatever it is.
Yeah.
So that's at play too. Yeah. But again, low rates fueled price escalation through the roof in a lot of places. I think the thing that I'm most concerned about this particular article is this quote halfway down your first page. We're just very slowly adjusting to this new normal of higher mortgage rates. Look, do I like higher mortgage rates than lower? No. Do I like lower rates? Yes. But I also know that it's not the only thing. And us talking about it becoming normal is abnormal for the majority of our population. They are used to the Fed being at 0 to 0.25% and rates in now the 4s.
That was since 2009, 10 more or less?
We have become accustomed to low rates for everything all the time. Yeah. And it's going to take a long time for people to become unaccustomed to that. So you got a credit card in the 20s, a car loan in the teens. Guess what? Your car loan's not going to be 4% on a used car or 5%. I mean, even new cars now aren't at 0. I don't see a lot of 0% deals anymore. No. I see 1.99 or 2.99, but they still got something baked in there because they have to. So they got to carry the cost.
Credit cards on average, I saw it was 28%. Credit cards, 28%. That's crazy.
Hey, by the way, that's a heck of a return.
That's a heck of a return.
You want to start lending money for credit card?
Yeah,
no, I don't want none of that business. None of that noise.
High risk.
They say. So we're at what they're calling recessionary levels for housing permits for 5-unit housing, multifamily.
Yeah.
But does that have anything to do with people getting adjusted to mortgage rates? Or do you think that it's just a conflation of the problem of money costs more, material costs more, everything just costs more all the time? What do you think about that?
I mean, everything just costs more nowadays. It's costing everything is. It's very expensive out there right now, especially when you're seeing these interest rate. I mean, I was just looking at the graph right here, Andy. It was just
So the lunch I brought you today, we used to go to lunch and it would cost us like $15, $16. How much would you think it was today?
I'm going to say like $20.
It was $25, including tax.
Oh, dang. Yeah. 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 That's crazy.
Shout out Flame Broiler Eastlake. Thank you.
Yeah, that is crazy. I went to go take this weekend. No, it was last week. I took my mama to a torta again, you know.
Oh, yeah.
Good. Torta. Mm-hmm. So we had torta and we had this cucumber juice, really good, you know, medium size. And Tanya wanted these large strawberries and cream. So we got that, you know, $49.
Whoa.
Yeah.
Hey, you know what? I like your barometer, though. I like our food barometer for whether things are more expensive or less.
Yeah, because before, I mean, these things were like $6. Like,
Andy
what's
Memo's,
going on?
Andy Memo's food chart.
Yeah.
So he's coffee, coffee, flame broiler, tortas.
It's unreal.
Street tacos.
But yeah, I see this in September. We're in the low fives, mid fives, you know, on government loans. And here we are today. We're back in the six and a half.
Yeah. So
crazy.
Yeah, and I know that we're seeing that as far as volume of, you know, in the office, because back in August when rates took a nosedive, we had a lot of deals. Yeah. And like they happened like really quickly. Specifically people with VA loans who were able to do a VA IRRRL. Correct. So people who bought in 22, bought in 2023, and they were able to reduce their interest rate through that streamline process. That was really good. I don't know how many people are hanging out that haven't done that still. If you did not, then you need to take a second look. Sorry, brief commercial. But if you haven't, take a second look. Yeah. I think that was a good majority of it. Yeah. But also, I know we had a lot of cash outs happening too. And again, situations sometimes supersede the preference financially.
Absolutely.
And if you are in a bind, and even though the mortgage rates look the way they are, if you got to get out of trouble on your personal spending debt side, the house might
not
be
not even a bind, just a place to just have a breather. You know, we keep mentioning $150,000 how we paid. This guy saves $3,000 a month after everything's said and done. It's crazy.
So what do you think is going to bring more sellers to the market, though? I mean, what's going to put more houses on the market?
It's going to be, for me, it's the lower interest rates, because if they sell, they're going to get in the higher interest rate already. Mm-hmm. So their payment's going to be higher than what they're currently paying. Yeah. The rate's got to be, you know, conform to what they're used to paying. Mm-hmm. You know, if I sell my home and I put this large deposit and my rate's still like 6.5%, 7%, the numbers don't make sense. It doesn't jive.
Yeah. Okay.
The math ain't mathing.
Yeah, the math ain't mathing. So you think rates are going to drive more listings?
Absolutely. Absolutely. Okay. Absolutely. The good thing is we have been seeing a steady increase of listings, you know, this year in comparison to last year. I believe they had it here. It was like 11% more this year than last year is what it was. And I do agree with that. I think, and here's the other thing. We've been seeing more listings this year than last year, and we haven't seen a decline in prices.
Right.
You know, what we have seen is that people have price reductions. That doesn't mean that their house, you know, dropped in price. What people are, they're listing their home based on when the market was crazy. Hey, my neighbor sold for that, so let me put it for that. But this market is not allowing for that.
I'm really glad you said that. There is a nuance there that I think maybe we even don't explain well sometimes. So let me give 30 seconds to explain it. So when you list a house for more than it's going to appraise for, you're still overlisting it. But if you do a price reduction, that gets counted in the price reduction numbers. So, 40% of homes had a price reduction in Q3. Well, if you overpriced it and then you had to reduce the price based on the appraisal to the correct value, that's still being counted that number that's going over here maybe like scaring you, when the truth is the appraised value is the appraised value.
Absolutely.
So if you're getting a loan, you're going to get an appraisal. Yeah. I know some people waive the appraisal if they're going to pay cash for a house, but look, whatever. That's a different scenario.
That though. That hasn't been the.
I know. It's just a nuance. But
right now we're seeing more sellers contributing towards buyers' closing costs. We've been seeing that. Yep. We've been seeing less bidding wars. Mm-hmm. You know, so I think it's good. For me personally, I would probably price my home under market value to create some type of bidding war to really see what the market, you know, holds for me as far as what people are willing to pay for that property. Yeah. I do it the other way.
And I think there's a little bit of a hidden forecast in this article too, because they're talking about housing starts for attached properties being up, like statistically substantially up. Condo starts jumping 8.1%. Yeah. That's a lot. Because it's not only the type of home, but we've reset where the starter home is. Yeah. You know, if the median house price was like $250,000 a couple of years ago, and now it's like 400 something.
Exactly.
That may not be approachable for someone who's trying to buy their first house across the country. I know here in San Diego, we're not just talking San Diego. You're in other parts of the country where you can find a house for 200 or 300. That's amazing. But when it comes to new starts and permits and housing and listings and sellers, it's going to be these attached homes.
That's
it's going to be these townhomes. It's going to be these multifamily units, and it's going to be these condos that are probably going to drive the first-time home buyer back into the front door.
Yeah, and that's what they have to do. Yeah, I like that part right here where it says recently released data from Zillow shows that housing starts were down from a second straight year in 2023. Although activity remains above pre-pandemic levels, real estate listings giant reported that builders have pivoted toward condominiums and townhomes in their efforts to create more starter home supply and lower price points. And we've been seeing this. If you go by Olympian High School, we see this in our neck of the woods because we're so landlocked that it's cheaper for us to build up, you know, and bring more people in and create these Truman Show communities that we spoke about a couple of weeks ago. I've been seeing a lot of that anywhere we're going. You know, in San Diego, it's like we've been seeing more of that.
Yeah. It's building up, not much more building out. That's probably just going to continue. And you're going to see a lot more concentration of people building like you are too on your own project of, hey, I already got this lot, this substantially sized lot that I can add another unit, 2 units, or convert a garage as well. People are going to do that, man. We're going to slam a lot more people into the same space we have without expanding that space.
Exactly.
And then we'll have the next set of challenges, which is going to be like commuting and oh, I'm not going to go down there.
No, totally. Well, you know, in my case, I don't have a lot. I actually don't. So I'm building the garage and I'm building up.
Yeah.
Right?
I was saying that relative to like a condominium.
No, totally. I totally understand. What I'm going with is we just got to get creative with what we have, especially with the new rules and regulations with ADUs in California and all that. We just got to get creative with it.
Yeah. So what do you think is going to happen this, you know, last question for this section. So what do you think is going to happen like this November, December? Because I had talked a couple weeks ago about how we're a quarter tick to the right, where our summer was our spring and now our fall is our summer. So summer became fall or fall became summer. So do you think that we're actually going to have more listings this year at December?
I think I think we'll have more once we identify who that new president's going to be. I really feel that.
So it's back to the election anchor.
A lot. I think there's more influence in this election, you know, because housing is the top of the topic for this election right now with these presidents. I really think that that's putting a hold on people on what am I going to do? Yeah. You know? So, again, this is a conversation I never had before.
Yeah, I think so. I think a lot of people are talking about it. What's interesting to me is that it's actually not the top of the sound bites that are going out. Well, the sound bites are all this trash talk and mudslinging and all that kind of bullcrap. But it's not the primary talking point that is being shouted from the mountaintops. It's he sucks, she sucks, and all that stuff.
Yeah, whatever it is. I think after the 5th, I think we're going to see a lot more people making creative moves. Okay, I'm already there. I've got to figure this out, and I just got to go now.